Hey everyone, and welcome back to the deep dive. We've all heard that crypto mantra, right? Not your keys, not your coins.
Absolutely. It's fundamental. Self-custody.
Exactly. But it brings up this other really tricky question. What if the code itself, the thing you're trusting, actually has a bug?
Or the smart contract just isn't.
Hmm.
Well,
That's
isn't that smart when push comes to shove?
right. And for the longest time, the DeFi world, decentralized finance, it really felt like the Wild West. I mean, truly.
Oh, definitely. High risk, high reward, but the risk felt constant.
Yeah, you could get these incredible yields, sure, but you were always sort of holding your breath. I remember hearing about exploits wiping out millions just like that.
And people almost got used to it. Hacks, exploits, rug pulls.
Yeah.
It was just part of the territory.
Scary stuff. And there was no safety net, no FDIC like in traditional banking, no customer service line to call if your funds just vanished.
Zero recourse, pretty much.
So that's where this really fascinating innovation comes in, DeFi insurance protocols. And I think it's crucial we unpack this.
Yeah, it's a really interesting development.
So our mission today is really to get into how this crowdsourced safety net actually works, what kind of things it covers, and maybe what it means for the bigger picture.
Sounds good. Where do we start?
Okay, so let's just break down the basic idea. DeFi insurance, fundamentally, it's this completely different way of looking at risk. It's community-driven.
Right. It's not like buying a policy from, State Farm or something. No central company.
Not at all. It's more like individuals pooling their money together, a collective. Think of it like a digital mutual aid society.
That's a good analogy.
So if you listening believe a specific DeFi protocol, maybe a lending platform you use is safe, you could actually stake your crypto into a shared pool for that platform.
You're essentially putting your money where your mouth is, betting it won't get hacked.
Exactly. You're backing your belief with your capital.
And the really clever part, I think, is the incentive structure behind it all.
Tell us about that.
Well, if you're one of these people staking your crypto, taking on that risk, you earn rewards. You get a slice of the premiums that other people pay to buy the insurance cover.
Ah, okay. So there's an upside for the stakers beyond just hoping the platform is secure.
Precisely. It's an economic incentive. Traditional insurance uses historical data, actuaries. DeFi insurance uses this real-time, community-driven risk assessment. People are constantly evaluating and pricing risk by deciding where to stake.
So it's like a dynamic risk market.
Exactly. It's living. It adjusts. And then if the worst happens, say, the protocol does get exploited, that pool of staked capital is what's used to pay out the insurance claims.
Okay, so the staker's capital covers the losses.
That's the mechanism. It's peer-to-peer risk management, really, driven by incentives and the collective wisdom or maybe bets of the crowd. It's fascinating stuff.
And it's grown beyond just covering smart contract bugs, hasn't it? Although that's probably still the main one.
Oh, yeah. Smart contract cover against code vulnerabilities is definitely the most common. But it has evolved.
What other kinds of on-chain calamities, as some people call them, can you get cover for?
Well, there's stablecoin depeg cover. That's a big one. Protects you if a stablecoin, which is supposed to be pegged to, say, the US dollar, loses that peg.
Right, which we've unfortunately seen happen. That can cause chaos.
Huge chaos. And then you've also got things like Oracle failure cover.
Oracles. Those are the things that feed real-world data onto the blockchain, right? Like price feeds.
Exactly. So if that data feed malfunctions, gives the wrong price, for example, it can cause all sorts of problems within the DeFi protocol. Wrongful liquidations, bad trades. Oracle failure cover protects against that.
Interesting. So it's becoming quite sophisticated.
It is. And if you connect this to the bigger picture, these different types of coverages are starting to address more systemic risks.
How so?
Well, think about traditional insurance. You insure your house against fire, right? That's your specific risk. In DeFi, because everything is so interconnected.
Like one protocol relies on another, which relies on an oracle.
Precisely. So a failure in one place can cascade. It's less like insuring just your kitchen and more like insuring against, the whole neighborhood's plumbing system failing at once because it's all linked.
That makes sense. It shows the system is trying to mature to handle these interconnected risks.
Exactly. Moving beyond just single points of failure.
Okay, so let's say the worst happens. A protocol gets hacked or a stablecoin depegs. How does the claims process work? You mentioned it's not like calling an adjuster.
Right. It's typically just as decentralized as the insurance pool itself. You usually don't have one person deciding.
So who does decide?
Often, it's the community of token holders for that specific insurance protocol. They assess the claim.
How? Do they vote?
Yeah, typically there's a process. You submit evidence of your loss, there might be a review period, and then the token holders vote based on predefined rules about what counts as a valid claim under that specific cover.
Wow, so it completely flips the traditional insurance model. No adjusters, just community governance.
Pretty much.
Yeah.
But that also brings up its own questions, of course.
Like what? Fairness, bias.
Exactly. How do you make sure the voting is fair? What stops large token holders' whales from dominating the vote, especially when big money is involved?
That's a really good point. How do protocols handle that?
Well, it's an ongoing challenge, and different protocols try different things. Some have dispute resolution mechanisms, maybe requiring huge majorities to approve a claim, or they might even bring in third-party auditors for contentious cases.
So governance is still evolving.
Definitely. It's a balancing act between that decentralized ideal and just practical reality. But one massive advantage is transparency.
Because it's all on the blockchain.
Right. Every claim submission, every vote cast, every payout, it's all recorded publicly on the blockchain. Anyone can audit it. It's immutable.
That level of transparency, you just don't get that in traditional finance, do you?
Not usually, no. And it raises a really interesting question, I think, about the future. If we can build trust through this kind of radical transparency in DeFi, where else could that apply?
Beyond finance, you mean?
Yeah, think about supply chains or digital identity verification. Systems where having a verifiable, immutable record builds trust without needing a central authority. It's a powerful concept.
It is powerful, but like you said, it's not perfect. This transparency, it could be a double-edged sword too, couldn't it? Privacy concerns, maybe? Bad actors using the data?
Absolutely.
Yeah.
That's part of the ongoing navigation the industry has to do. And beyond that, DeFi insurance is still pretty new. It definitely has growing pains.
What are the main challenges right now?
Well, liquidity is one. Is there actually enough capital staked in these pools to cover a truly massive, maybe system-wide kind of event, like a huge exploit affecting multiple major protocols at once?
Right, the black swan event.
Yeah.
Could the pools handle that?
Valid concern. And then the other huge question mark is regulation.
Ah, yes, the regulator.
What is this stuff legally? Is it actually insurance in the eyes of, say, the SEC or other global regulators?
Yes.
Or is it something completely different? That's still very much up in the air.
And that uncertainty must make things difficult.
For sure. But look, these are pretty natural challenges for any genuinely new and disruptive industry. They're not necessarily roadblocks, more like, well, areas where we're going to see a lot of innovation happening next.
Finding solutions to the liquidity problem, figuring out the regulatory path.
Exactly. The space adapts incredibly quickly.
And I think that adaptability, that drive to innovate, really gets to the heart of what DeFi insurance represents. When you step back, it's more than just another financial product, isn't it?
I think so, too. It feels like a statement.
Yeah. It's the DeFi community saying, okay, the old system's safeguards don't apply here or aren't enough, so we'll build our own, creating their own trust mechanisms, their own ways to manage risk.
Completely. It really reinforces this core DeFi idea that maybe, just maybe, we don't always need the traditional gatekeepers, the intermediaries, to handle things like risk.
Because the tools are being built within the network itself.
Exactly.
Yeah.
It shows how transparency, combined with clever incentives and, frankly, a lot of ingenuity within a decentralized network, could actually lead to a system that's more resilient, maybe even ultimately safer for everyone involved.
That's a powerful thought, especially as these systems keep evolving and getting more complex. Okay, well, that pretty much wraps up our deep dive into DeFi insurance for today. We've covered a lot, from how it works with pooled staking,
To the different types of cover, like for smart contracts and stablecoins.
and that whole decentralized claims process with community voting. It's clear this is a community really trying to solve its own problems in a novel way.
Definitely a space to watch. And it leaves us with a fascinating question, I think.
Go on.
Well, considering how DeFi insurance is trying to reimagine risk management without the usual gatekeepers, what other traditional industries, what other services might be ripe for that kind of radical shift, towards being more community-driven, more transparent, more decentralized?
That's a big question. What does this imply for trust and safety more broadly, especially as our world gets more and more digital?
Something for all of us, and especially you listening, to think about. Where else could this model work?